I'm coming in briefly to show you something on this chart, because there's a lot of people that trade and they don't show what they do, but you know, those that really take the risk and does it and study for it, like, you don't mind showing what you do. So I'm removing this fair value gap. We know that it's there. Okay, there we go. We get a cleaner look. So the market down here, this was a low. Okay, this right here, boom. This right here, I'm sorry, I was looking in the opposite direction with the phone. This right here was a low. Okay, and then if you see the market climb, but this up here on top of the candle was the highest price went at that moment before price again form another low. Okay, this is price action. This is understanding what price does and why I got into the trade I had got into, even though I closed it, so I could tell you why I got out of the trade. So we identify red with down, blue. It's actually green, but I ended up putting blue, so let's do it. Green with up, and this again as down. Okay, so all right, so you get the idea. And this point right here, this right here is where I'm at, would be up. Okay, so you get the idea. So this went up. This is the highest point it went. This is higher high. Then right after the higher high, it made a higher low. The reason this is a higher low, because this low is higher from the previous low. Then after that, price went right back up. Let me make my screen brighter. It is like it is. Right after that, price went right back up. Okay, and then the price that it went up to this candle right here, or this wick. But at a time, for it to be a wick, it was a candle. Sometimes in the New York session, the session market, all the same thing. We just use different terms. It depends who's trading. Okay, so this at a point in time, it went all the way up to here. You might not see it. It could happen in microseconds. So on the hour time right now, I'm showing you this. We could go down to 1 second, 5 seconds, 10 seconds. So you understand. All we're doing, we're actually trading contract in time. We're trading time before time happens, basically. And then we're not trading time like the time. We're trading price, the movement of price, where price will be. Price is here, price is going there, and so on and so forth. There's people that says buy the dips. So when you wait, it dips, you buy in, and then you get the climb, you get out. Oh, I'm sorry again. You wait right here, you buy the dip. You this is the climb. So now let's say you're not in the trade. So you wait on it to draw down, just pull back, draw down. Okay, some people will say short, dip, to see how many terms they give the same thing. That's why it's so hard to learn trading, because people are confusing you with a whole bunch of different terminology when it's all the same thing that they're saying. Okay, so now right after that, bam, bam, boom. So we're on the hour time frame. 2 hours later, 3 hours, 3 hours later, right here, 3 hours later, um, it it draws down. You would wait. It would form this first candle, and then you would get in. Bum. You would write it up. It would reach this peak at a time, and when it reaches this peak, you won't know. It could be on it's on an hour time frame, so you would have time to be in the trade, get in, and as it's decreasing, move up your stop loss. It's because you came from down here. On an hour time frame, these is thousands of dollars of movement that looks so close. It's our time frame. This one candle alone, it depends what you come in with. If you come with a full mini contract, this one candle could be anywhere from $1,500 to $3,000. That if you just caught this one candle on an hour time frame that you make, it depends. Okay, if you go 2 contract, 3 contracts, you could be making 15, 30,000 on this one candle. That's all you're trading. We're trading time. So now we have lower low, higher high, right? So now again, it pulls right back up. It creates another higher high. But in this higher high that it creates, you have what? Boom. They call this right here, they call this an order block. Okay, some people will say when they get in, they'll be like, "Oh, this is price is just consolidating." The reason is when you're looking at it on the same time frame, it's not really consolidating, it's moving. It changed. They call it something else. People trade that too. This right here. Okay, right in between this line. I'm gonna get my stand for this next video. Okay, right here inside this line, it changed to something else because you got 1 hour. Let's say you bought in right here, boom. So you're stuck in this box, right? So you got 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours, 9 hours before it pushed back up. Okay, so on a 9 hour time frame, what you're looking at is 9 hours, man. That's a whole shift of work. It just bounced up and down. And this is called range. They call this, some people trade this and call this range trading. Because on a smaller time frame, the gap is big. So, no, not this. Let's go down to 5 minutes. You see? So on the 5 minute time frame, you're looking how it ran, and it dipped. Okay, so this is what happened to me. I fell in the dip. That's how you're seeing it. But I'm trying to show you this before my time run out on this video. Is at this higher point right here, at this area right here, this is the highest point price went. And on our time frame, I got one big candle, the next hour another big candle, and all these bitty. This is, chances might be that it has to test this fair value gap, close it, go down here, or touch this resistance to pull back up. And again, this is an hour candle. You hold this, I took $174 loss in it. Holding it any longer, I bought in up here and sold out. Holding it, and if it decides to fall, it draws down $1,000 something because I was only holding one micro, and then for it to pull back up, I didn't see the point to, so I got out, let it do its thing. New York's about to open in the next 40 minutes. and then boom, we lunge from there and recuperate. So the market might be reversing the pull back down half of the day, or, and then go back up. We don't know, but this also could be FOMO, fake